So ESPN gets a lot of attention, but it sort of deserves it, given how big it is, how much revenue it generates, how much profitability it generates.
Yeah, the cable network business for the Walt Disney Company continues to be the #1 growth driver, and obviously ESPN's the engine for that. So, they've got a couple of issues here. The most notable one is the decline in subscribers that they first flagged about two years ago. That has continued. That's a real problem for them because it pinches their advertising revenue growth and their affiliate fee growth. And theirs is a business that really has a very high level of fixed costs with all these sports programming rights that they've tied up billions of dollars of sports programming rights. That's tough. That's a fixed number, and if your revenue is coming down, that really crimps your margins.
And they've warned already that there'll be some softness toward the beginning of this year, specifically on the rights charges. The sports rights are really expensive, and they're going to take a hit on that. But they're also trying to replace some of those subscribers on their basic cable, the big package that they have, with some of the skinny bundles and other packages, other ways of reaching people through digital distribution. Is it too soon to see whether that's working?
I think it is. I think that, they are on some of the skinny bundles that are being rolled out into the marketplace, but there's also some scenarios where they have not been included because of the high cost of the ESPN network. So the real question for the Walt Disney Company on the management call tonight will be, do you have a strategy to take ESPN direct to consumers over the internet, much like HBO has done with HBO Now, kind of bypassing the cable distributors and going direct to consumers? It's a real challenge. It's a conundrum for Disney because they make so much money off of the cable bundle that it's very difficult for them to try to wean themselves off of that and go direct to consumers. So it's a very fine line about when and how they will do it, but I think investors are saying we need to see a strategy coming out of Disney.
They also have to be careful about alienating their partners too quickly, because the people that are charging for the ESPN things, if they go around them, then they could lose some of their fees. ESPN's not the only part of the Disney business, though. What are the other parts that could pick up some of the slack? Yeah,
I think the two other big areas for the company, obviously, are the parks and resorts business. That has been a phenomenal business for them. It is a solid, low double-digit grower in profits every single year. We're actually coming up to the one-year anniversary of the opening of Shanghai Disney, their big foray into China, so investors are going to want to see how that's progressing. But that continues to be a very strong business for them. And then conversely, they also have the filmed entertainment business, where they're every single year they seem to churn out 3 or 4 or 5 huge franchise tentpole pictures that are at or above $1 billion in global box office. So, the acquisitions they made of Pixar and of Marvel and of Lucasfilms have really paid off for Bob Iger and the company. That business, which historically has been a very hit-driven business, hit or miss for most of the studios, not for Disney. It's been a very consistent growth story for them.
Because they have franchises, they're almost pre-promoted. People know what a Star Wars is before it comes out. They know that franchise. But it also is not just what they get at the box office. Then that follows for some time afterwards with licensing and also theme park developments and things like that.
Yeah, no one has really done a better job than Walt Disney Company of kind of taking their intellectual property, whether it's Mickey Mouse or Darth Vader, and expanding it out through the other parts of the company, whether it's merchandise or in the theme park rides. And a lot of other companies like Comcast with their Universal business, they're trying to do the same thing. But Disney's been at it for a long time. They have a tremendous amount of success kind of leveraging their characters and their franchises across many platforms. And, just coming up right now, Walt Disney World down in Orlando, they're opening up an Avatar theme park segment, so that should be another driver for growth in that market.
Whenever we have an earnings call, some of the attention focuses on Bob Iger himself. I mean, he's been very successful. If you look at the stock price, shareholders are very happy with him being here. He's now extended until 2019, but at some point there will have to be someone who comes after him. What will we learn today, if anything, about the process, at least, by which a successor will be chosen?
Yeah, I mean, Bob Iger's obviously had almost a spotless record. I would argue the one big miss on his watch has been this succession plan. It really has not worked out the way he wanted to or the board wanted to. So clearly they are kind of on to plan B, which I don't think they really originally had a plan B. So we really need to see some kind of movement on their part, some kind of direction, and some kind of sense of timing of whether they will go internally or externally. I think investors are really going to start pushing on management to get some feedback on that.